Every trader faces it. You start the week feeling sharp, confident, ready to follow your plan. Then you take one bad trade. You tell yourself it's fine, just a small mistake. But the next one hits harder. Before you even realize it, your confidence starts to fade. You're not really afraid of the market. You're afraid of what you might do next. Afraid that your emotions will take over. Afraid that you will make things worse while trying to fix it. This video is about how to stop that spiral before it breaks you. How to manage losses, recover from drawdowns, and protect your mindset when the market hits back. Welcome back to the Trading Psychology Course. In this chapter, we're focusing on emotional management of losses and drawdowns, one of the most important skills that separates long-term traders from short-term survivors. You will learn how to handle losing streaks without falling into emotional chaos. We'll break down what really happens inside your mind during a drawdown, why confidence fades and control slips, and how professionals recover both mentally and strategically. We'll also look at insights from Larry Williams on rebuilding after losses and connect those ideas with modern trading psychology so you can regain focus and discipline. By the end of this lesson, you will have a clear structure to protect your mindset during hard periods, a practical plan to manage emotions, stabilize confidence, and come back stronger after every setback. If you find this kind of content useful, give this video a like, subscribe to the channel, and turn on notifications so you do not miss the next lessons. Sharing with a friend also helps our community grow. Now, let's start with something simple but real. Losses hurt. Not just financially, but emotionally. When you lose money, it is not only your account that takes a hit. It is your identity as a trader. You start to question yourself. Did I do something stupid? Am I really cut out for this? That self-doubt is where emotional damage begins. Psychologists have shown that losing money activates the same areas of the brain as physical pain. That is why you do not just see a red trade, you feel it. It is a punch to your confidence. And when the pain of that loss stays unresolved, it does not just affect one trade. It infects the next ones too. That's why professionals treat emotional pain seriously. They know the real damage does not come from the loss itself, but from the emotion left unresolved. One unprocessed loss can lead to weeks of hesitation, revenge trades, or impulsive decisions. But when those emotional wounds pile up instead of healing, one losing trade hurts, but a series of them can shake even the strongest trader. A single red day is manageable, but when those losses start to stack, something deeper begins to unfold inside you. It is no longer about losing money. It becomes about losing confidence, rhythm, and identity. The spiral usually starts quietly. First comes frustration, then the urge to make it back. You stop seeing setups with objectivity and start seeing them as chances to erase the pain. Your focus shifts from reading the market to repairing your ego. You are no longer trading what is in front of you. You are trading what happened to you. The deeper this spiral goes, the harder it becomes to think clearly. Every tick feels personal. Every loss feels unfair. That is when trading turns into survival mode. Not analysis, not execution, just emotional defense. And if you do not stop it early, that spiral can erase months of progress in a single week. To understand this better, trading psychologist Brett Steenbarger explains why repeated losses are so difficult to accept, especially for high achievers who are used to success.
It is very difficult for someone who has succeeded consistently in other areas of their life to enter a performance arena where you're going to be wrong 50% or more of the time. So in college and school, I had a grade point average where all my grades were A's or B's. And that's what allowed me to get to graduate school and be successful academically. So I never had a quote unquote failure. In trading, I have many failures. There are many losing trades. And if you can't accept it and use it constructively, it can really tear you down.
Brett Steenbarger reminds us that one of the hardest adjustments for high achievers is accepting that in trading, being wrong half of the time is completely normal. Frequent losses may feel like failure, but in markets, they are simply data points that carry information. Authors like Carol Dweck and Mark Douglas show that professionals reframe losses as feedback, not defeat. Trying to avoid them only leads to denial, overtrading, and eventually bigger damage. True professionals accept losses as part of their edge. They use risk management and consistency to turn probabilities into long-term profitability. Acceptance turns pain into clarity, and that shift breaks the spiral. So how do professionals stop the emotional spiral before it takes over? They reset completely. The difference between a struggling trader and a consistent one often comes down to how fast they can hit the reset button after a drawdown. The first step is acceptance. You have to stop fighting reality. The losses happened. They're not a reflection of your worth. They're part of the statistical nature of trading. The more you resist, the more pain you create. Acceptance doesn't mean giving up. It means freeing your mind from denial so you can see clearly again. The second step is reducing risk. Professionals don't fight fire with fire. They fight it with control. That might mean cutting position size in half, pausing live trading for a few sessions, or focusing on chart review instead of execution. You're not retreating. You're rebuilding your foundation. Then comes reflection. Write down what happened, what triggered the spiral, and which emotions dominated your decisions. But don't relive the trades. Reflection is not punishment, it's observation. You're studying behavior, not judging it. And finally, reset your body. Physical tension fuels emotional chaos. Walk, exercise, breathe deeply, sleep well. A calm body regulates a calm mind. That's why top traders protect their physiology as seriously as their capital. Because you can't trade well from a stressed state. Resetting the body resets the mind. So once you've reset, the goal isn't to make the money back. It's to rebuild your rhythm. Confidence doesn't return all at once. It grows in small, consistent steps. Professionals understand that recovery is a process, not an event. You don't bounce back overnight. You rebuild by proving to yourself that you can execute again. Start small. Lower your expectations and focus on process, not outcome. One good trade, executed with discipline, is more powerful than a week of emotional overtrading. Every time you follow your plan, even if the trade loses, you rebuild a piece of your confidence. Over time, those small proofs stack up and form the foundation of trust in yourself again. Brett Steenbarger teaches that recovery isn't about motivation. It's about structure. When you go back to your habits, your pre-market preparation, journaling, emotional check-ins, you start to feel in control again. Structure brings rhythm, and rhythm brings calm. That's when your mind stops chasing results and starts respecting the process. To reinforce that recovery grows through structure and learning, Brett Steenbarger explains how resilience increases when we treat losses as information.
What gives you the resilience is that you're treating losses as learning experiences. And because you're not erasing the memory of it, you want to remember, let's say a bad trade, a trade that goes wrong. You want to remember it because you want to learn from it. In that sense, you're embracing the losses. Now that, of course, presumes reasonable risk management, okay? But if you are making a good bet, betting this amount to make this amount, and it goes wrong, you can try to identify what might I have done differently, what did I miss, and so now the loss is not so threatening. It's there to make you better. Resilience helps us traverse our learning curves. We're going to make mistakes, and even the best traders are often wrong close to 50% of the time. We want to use losses to make us better, not to tear us down.
Use structure to turn setbacks into feedback. That keeps execution steady and lets confidence return step by step. When that flow returns, something shifts. You stop reacting and start responding. The same market that once broke your confidence becomes the tool that rebuilds it. Because flow isn't about avoiding losses. It's about staying emotionally steady, no matter what the outcome is. Now that you understand the emotional mechanics of a drawdown, let's make it practical. Every professional trader has a rule that protects them from emotional overload. One of the simplest and most effective is called the 3-loss rule. It's not about the number 3 itself. It's about recognizing when emotion starts to replace logic. Here's how it works. If you lose 3 trades in a row, you stop. No one more try. No, let me make it back. You step away. That's it. Don't try to make it back, just don't wait. Understand, even if you still see setups on the chart, that pause isn't weakness, it's awareness. It's the point where professionals protect their mind before protecting their money. During that pause, don't analyze charts, analyze yourself. Open your trading journal and ask 3 questions. First, what emotion dominated those trades? Take a moment to name it clearly. Fear, frustration, revenge, or maybe exhaustion. When you can name the emotion, you take away part of its control. Awareness is the first step toward regaining balance. Second, was I following my plan or reacting to pain? Be brutally honest here. Sometimes we think we're being disciplined, but deep down, we're just trying to fix the feeling of losing. Recognizing that difference helps you separate logical trading from emotional trading. And third, what do I need right now? Rest, clarity, or distance? Each answer leads to a different kind of reset. Rest helps your body recover. Clarity helps your mind realign. And distance helps your emotions settle. Those questions shift your focus from punishment to recovery, from blaming yourself to learning from yourself. It's not about perfection. It's about awareness. And awareness is what turns a losing streak into a lesson. This simple habit prevents a bad day from turning into a bad week. It builds emotional discipline and creates a buffer between you and the chaos of the market. The traders who survive long-term aren't the ones who never fall. They're the ones who know exactly how to stop the fall before it becomes a crash. So this week, I want you to create your own 3-loss response plan. It's simple, but powerful. Write down exactly what you'll do if you lose 3 trades in a row. Be specific. Will you stop trading for the day? Review your journal? Go for a walk. Reduce size on your next session. Build a short written checklist that helps you pause before emotion takes over. The goal is to replace panic with a plan. When your brain knows there's a clear routine to follow after a loss, it stops treating every losing streak as danger and starts seeing it as data. That's how professionals keep their composure even in the worst weeks. Remember, emotional control doesn't come from suppressing feelings. It comes from knowing exactly what to do when they appear. And the most important thing you need to understand is that losses are inevitable. But emotional collapse is optional. Every trader goes through drawdowns. What defines your future is how you respond to them. When you accept losses as part of the game, they lose their power over you. You start to think clearly, act deliberately, and trade with confidence again. The traders who survive are not the ones who never fall. They're the ones who know how to rebuild themselves every time they do. In our next chapter, we'll take this one step further. We'll explore how routine, preparation, and mental performance shape your daily consistency, and how a 10-minute pre-market ritual can completely change the quality of your decisions. Please also remember that you're not alone on this journey. All the material in this course was developed by the ComLucro channel, built on thousands of hours of trading experience and enriched with knowledge from books, lectures, and videos you can also find here on our channel. I invite you to explore our other courses and learn from the insights of world-class traders and coaches like David Paul, Alexander Elder, Tom Hugard, Mark Douglas, Al Brooks, Larry Williams, and many others we study and share here. And in the next module, we'll go even deeper to help you understand trading decisions and how to align your mind so it works for you, not against you. I hope you enjoyed today's video. If you found the content helpful or engaging, please give it a like, as this helps the video reach more traders like you. And don't forget to subscribe to the channel and turn on notifications so you never miss our latest insights on the markets and practical trading strategies. Sharing this video with your friends or on your social networks can make a big difference and helps our community become stronger. Now, if you want to go even deeper and get access to exclusive content, early video releases, and extra tools to support your journey, consider becoming a member of the ComLucro Trader community right here on YouTube. It's a way to support our work and a smart investment in your own development. Thanks for watching, and I'll see you in the next video.